Hi guys, welcome to the Savvy Money Show with me, your host Sean. Today we're going through the market and the stocks in the market, how they're acting, and if you make it to the end of the show, sorry about that, there will be a freebie in the description for you. And starting with Ericsson. Now, it reported better than expected growth due to 5G sales in China. Apparently it grew by 4%, and it reckons it's going to hit expectations for 2020-2022. Funnily enough, doesn't have expectations for 2021. Seems a bit weird, but what can you say? And had a spike up because of that. Now I'm going to rush through these, and so I'm not going to do in-depth interview because there's a lot to get through. We go on to PepsiCo. It's a stock I said to go into when it was $98 a share, along with Fizz when it was under $50 a share. And apparently its net sales are down 3.1%, which is to be expected with all the restaurants closed and only just opening up again. The food side growth is up, but revenues have beaten expectations. And now we head into Ocado. Now it's done well out of this. Apparently it's only got a $40 million loss, but it is a loss. But that's compared to a $140 million loss last year. As I said before, Marks and Spencer's overpaid for the partnership with them, and they reckon they're going to get to profit. They're going to continue this growth and get to profit next year. Anyway, and don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Savvy Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of offers. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. We move on to Mr. Looney's BP. Apparently become the first trader to physically deliver a futures trade in Shanghai. And we can see that despite OPEC saying demand has increased by 7 billion barrels of oil per day, it's still below 2019 levels, and that is why it's so low and why the tanker stocks are so high. And the problem is OPEC is between a rock and a hard place. It wants to cut production, but because it's employed by the oil companies, is expected to increase crude output. Otherwise, they'll stop funding them. They'll say they can't afford to. Anyway, on to Citigroup. It's America's third largest credit card supplier, and it's reported a 72.3% drop in profits, which isn't exactly chump change. Now, that was an intraday chart, and this was the yearly chart. And we go on to Wells Fargo, who reported a $4 billion loss compared to a $6.2 billion profit last year. They are one of America's biggest mortgage lenders, but they don't have an investment arm like JP Morgan. And speaking of JP Morgan, they had the better than expected earnings due to their investment arm, and that is mimicked more or less perfectly by Goldman Sachs. And they have had the same earnings. Now we're leaving the banks behind, if only. No more bailouts, please. And we're heading to Boeing. Boeing's net loss of orders is 784 planes. They're minus 784 planes off their order book. They only delivered 70 planes this quarter. Now, it's not all bad news. They had their bond issue, and there was a huge take up for that. And saying that, British Airways are retiring their 747 fleet, which means once people come back to flying, there'll be good news for Boeing. British Airways were thinking of retiring it in a few years anyway, rather than servicing it, but now it was the perfect time, because rather than buying a new fleet, they just leave the sell the 747 fleet onto someone who hires the planes out. They bring in a bit of cash when they need it, and they don't buy a new fleet. They wait until customers come back. Now, Delta have had worse than expected earnings, but they're cash rich. The cash burn is down 27% to $27 billion a day. Now, the revenue is down 88%. The loss per share is $4.33. They have $15 billion on hand. Now, we are moving on to Dixon Carphone. Their sales are down 1%, but their revenue's down a lot more. We've got a rush. Netflix. Now, subscribers have increased by 10 million over a quarter. Revenue increase. 10 million over the quarter. Revenues have increased by 24% over the quarter. Now, this is a perfect example of what I was speaking about a month ago. How all these companies, including Boeing, Netflix, Amazon, Tesla, and all the others, are having a perfect recovery factored in. If everything is not perfect, then it's going to drop. So there's two ways to look at this. This had perfect recovery factored in for it. They expected better earnings. This had great earnings, in my opinion. Over 10 million subscribers increase over the quarter. The revenues increased by 24%. However, this put it back to beginning of July levels and dropping, because people think you should have been doing better. Not just that, but on the earnings call, they expect to be losing subscribers. They expect When I say subscribers, I mean paid subscribers, which is the important thing. And I expect things to get worse as going forward. So basically, all this growth from here onwards, they could lose over the coming months. So that's something to factor in when you're looking at all the other big names as well. Now, if we've got time, we can go to tip ranks, and we'll see that Dana Holdings was a buy, Tesla was a sell, Walmart was a buy, Coca-Cola was a buy. Well, it's always a buy. And we'll move on. I wanted to go into, I had a thing for Prudential. Where was it? Sorry about this, I must have written over it. Basically, Prudential have filed their form 8K form, and they are sitting with the news that they are preparing to do a $2 billion share buyback scheme in the latter stage of 2020. They can do that at any point that they think is worth doing, but considering they claim to have a book value of $153 and they have a good dividend, like 6.85 cent, they may even start it before their earnings day in August if they think that that's going to go up. A PE ratio of 8.83. It's not too shabby, is it? Now, if you'd made it to the end, I noticed Trading 212 investment calculator is not accurate enough. So there's this one that I will post a link to in the description, and please do not put what a lot of financial freedom people put the 8% on. I've put 6% here, but I prefer to put 4%, and the 20,000 is because that's what the ISA allowance is. This is in dollars, although you know it would be pounds. And you see there how much you can get, and then you can pull some of it out once you get to that and put in a real estate and carry on. What I'm saying is, after 10 years, you can pull some of that out, put some of it in real estate and start over again, or you can keep it in. Do whatever you want. I'm just talking about diversification. However, I'll try and link this down below, and I'll see you in the next video. Don't forget, stay safe, stay savvy, stay investing. Goodbye.